Happy Monday. It is July 28th. We are here for our daily mortgage interest rate update and what is going on in the U.S. with the housing market. If we haven't met, my name is Chelsea Winstead. I am a home financing strategist and a mortgage lender. I specialize on the East Coast. Today, let's talk through a couple things on what the stock market did. We had a new trade deal happen between the U.S. and Europe. We had some car tariffs change up a bit and a couple pieces of economic data that I think will be important for you to know as we go into our new week of house hunting. Okay, so first off, let's just talk about stock today. So the Dow went down a little bit while the S&P 500 barely moved. Mortgage bonds dropped. And so when bonds fall, rates often go up slightly. So I know it's like a little counterintuitive, but that is something that happened today. So just be on the lookout there. All right, so big thing kind of report or update for today. So the US and Europe made a new trade deal. Okay, so we used to pay about 1.5% in tariffs on goods from the EU. Now it is at 15%. So now we're going to be paying 15%. However, around 14% of what we import comes from Europe. So this deal will slightly raise prices for some of our everyday goods. This cost will trickle down, but we're not expecting prices to be impacted that heavily. We do expect prices to go up about 0.2 to 0.3% for most things that we are using or, purchasing that are from the EU. So again, not a huge element, but that does have a impact on inflation. So keep that in mind. Now, this is something that came out today as well that will be really good for U.S. automakers. So car tariffs changed. So in Europe, Europe used to charge 10% tax on American cars. Now this is down to 2.5%. All right. Now the U.S. used to charge a 27.5% tax on European cars. We have now cut it down to 15%. All right. So this makes U.S. cars more affordable abroad, which is good for our auto industry. Okay, a couple of pieces of economic data that are coming this week. So the JOLTS report, which is job openings, is expected to show fewer new jobs. Okay, so we're expecting this to be down by about 200,000. The ADP and BLS reports will likely still show job growth, so about 78 to 110,000 jobs added. However, unemployment is expected to rise a little from 4.1 to 4.2%. When it comes to the Fed or the Federal Reserve, they are meeting this week. However, we're not expecting to see cuts, so no rate cuts expected. A big inflation report called the PCE will also drop on Thursday. This is expected to show a small bump from about 0.2 to 0.3% of an increase. So overall, what this means for mortgage rates is that rates may rise slightly this week if inflation is still showing signs of heating up. If the job numbers this week are weaker than expected and inflation stays low, mortgage rates may hold steady or may potentially drop. But again, inflation is still a concern, so we're not expecting to see any major drops. Specifically, the tariff situation with the EU, I think we're going to definitely just see rates hold. I'm always into seeing a drop, but I'm not sure that the likelihood of that is very high. The bigger impact of this, so I specifically focus on the East Coast. If you go to the link in my profile, there will be a list of all the states that I cover. What we often see when we see rates staying at an elevated level is that buyers, interestingly enough, have more negotiation power at the closing table. So high rates often scare buyers away. When buyers are scared and they're not flooding to the market, sellers are then struggling to sell their home. It's not that they can't, but it's just not as easy as it once was. So then what that means is that sellers are much more likely to negotiate on the terms of you purchasing their house. Now, a caveat here, this does not include new construction. When you buy new construction, you pay what is listed. They're not like new construction, they don't negotiate. Also, specifically, if you live on the East Coast, I did a video on this about a week ago of looking up new construction, especially mass builders before you purchase. Please do your due diligence there. But what I am speaking about specifically is when you are buying a home from an existing homeowner. So a home that has already been built. It is not a brand new home and it's not new construction. When you are buying from another owner, you are going to have a lot of leverage and buying power, especially on the East Coast. Now, with that being said, I've done a couple videos lately through Maryland, North Carolina, South Carolina. I've hit a couple major cities. So obviously there are still some places where it is still deemed a seller's market, which just ultimately means that there is more demand than supply. So there are more people that want to purchase than there are homes to purchase. When we see that happen, the sellers then often do not have to negotiate as hard. One thing that I would highly recommend that you do, and this is something that I do with every single one of the clients that work with me, is that we actually do a market analysis on where you are purchasing. So when we kick off together, one of the first questions I ask you is like, where are you looking to purchase? Part of our process is that we actually do a deep dive into the city that you're wanting to buy in, and we look to see specifically, are you in a buyer's market? Are you in a seller's market? Are you in an even market? That is very critical into how you move forward. So when you are in a buyer's market or even in like an equal market, you are going to have more ability to negotiate. And what I mean by negotiate is you're going to be able to ask for the cost of the home to be less. You're going to be able to ask for seller credit. You're going to be able to get a contingent offer accepted. I always call those the 3 C's: cost, credit, and contingency. A lot of the time when it's a seller's market, you're not going to get any leverage on any of those things, right? So the main thing to take advantage of is to work with a strategist who can look into the market that you are wanting to buy in and to create a specific plan, run specific numbers, and help you essentially benefit the most that you possibly can, depending on where you are buying. So with all that being said, this week, I quite frankly do not expect us to see any major rate drops. However, again, when rates are a little bit elevated, it means that not as many buyers are buying, and that means that it often allows you to have more leverage and negotiation power when it comes to making a purchase. P.S. Another thing that I do is after we run our numbers and we confirm like what our purchase price needs to be, and also once we confirm when you would like to move forward, I do a one-on-one matchmaking service. So what that means is that we look at the city you're buying in. I will actually go out and find a top producing buyer's agent to join in on our team to help represent you on the transaction. What this then allows them to do is I will then give them a brief on like what numbers we have come up with and what our plan is. And then they can go out and then execute that plan when they go to put in your offer and also when they go to look for homes to show you in your area. This is the time to be strategic, y'all. Like 4 or 5 years ago when like people were just like buying random things, like you didn't really have to work with an experienced lender. You really didn't have to work with an experienced agent. You could Google, call anybody and get into a house. Today, it's very different. You really want to make sure you're working with a lender who knows how to run numbers strategically, and you definitely then want you to have an agent that has been hand selected based on their performance who can then go out and best represent us when it comes to putting in your offer. Who you decide to work with in this transaction can honestly be a make or break on if you save thousands of dollars on purchasing a home or if you're saving hundreds of dollars a month when you buy versus not. So with that being said, if you're looking to buy on the East Coast this year, I would love to support you. If you had a link on my profile, there is a home connection request form. Pop in your info. Somebody from my team will text you to kick off, and yeah, we will get it done. We will make a plan. All right. As always, if you have any questions, leave them in the comments, and my DMs are always open. P.S. I will never DM you first. I never will do a cold DM or do like outreach. I get probably 4 or 5 fake accounts a day that pretend to be me. I am so sorry, but I will never randomly cold message you if we have never had a conversation before. All right, y'all. See you tomorrow.